What do we have to think about when selling a probate property?
What is fair? What does that actually mean? Because it'd be very different. Does fair mean leaving everything to your own biological children? Does fair mean including your partner's children?
Lovely word, declaration of trust, because trusts sound really complicated, and actually they often are, aren't they?
But there's another one we haven't talked about yet, which is income tax.
So actually, downvaluing can draw the attention of HMRC to the situation. Hello. Today I'm going to be speaking with Demi Trunks, who is an associate solicitor in our probate trusts and wills department. But actually today we're going to be having an emphasis upon the property aspect of all of those situations. Demi is an expert in these situations, and so I'm really pleased to have her here today. Hello, Demi.
Hi, Melinda. Thanks so much for having me.
That's my pleasure. So what do we have to think about when selling a probate property? Obviously, everybody has to have a grant of probate, but at what point does the property get put on the market? What does the probate valuation that we put in the application forms the probate valuation in terms of the application forms, I should say, have to do with the sale price? And what do executors have to be careful of? Demi, I know this is something you are very hot on when you get instructed by executors, or when indeed we are, as Giles Wilson, the executors. And clients can get quite keen on having a low probate valuation, and
Yes.
then, wow, we've sold the property for £50,000 more. But that can give us a problem.
It absolutely can. And I think clients sometimes see it as an achievement to beat the probate value or something like that. But actually, it can cause problems later down the line. So when I first meet with a client, we have a really open discussion at the beginning about the importance of getting accurate valuations, particularly for the property. With other assets, there can be a little bit of leeway with these things, but with the property, it's particularly important. So I'll give you a real life example to get us started
Please do,
off.
yes.
If you have come to me and you've said that, your mum's passed away and I'm terribly sorry about that, you were looking to put the property on the market and you thought the property was worth about £300,000. And I would then advise you to go away and get 3 estate agent valuations.
Sorry, can I just interrupt? Is that important for all estates that we get those valuations? What if that's the only asset? Or what if the property's worth, perhaps, I'm going to be devil's advocate here, what if the property is actually worth around £250,000 and mum has maybe £10,000 in the bank? Is there a difference in the value spectrum that we're talking about?
There absolutely is. So in your scenario, if the property you think it's only worth about £250,000, we could potentially be a little bit more flexible on the figures we're using.
And that is why?
In the probate application, because we have certain things we have to consider when we're looking at making a probate application. The first thing we're looking at is what is the value of the estate, and we've got to think about the inheritance tax allowances. So if we've got an inheritance tax allowance in this scenario of £325,000, but we know the property is worth significantly less than that, we can be a little bit more flexible with choosing a property valuation. That being said, though, I would always advise that you get proper valuations done by an estate agent, and we're not just looking online, going on a Zoopla or a Rightmove or something like that, because it can actually trip you up.
It can, and the district valuer has a right to question it anyway. Does
Absolutely.
it? HMRCs send their own valuer out to see.
I've noticed that more often, actually. When I first started dealing with these matters a couple of years ago, I'd only had 1 or 2, whereas in the last year I've had 3 or 4 requests from HMRC to come and send their own valuer out to look at the property and assess in detail whether that valuation that is used has actually been correct.
So actually, downvaluing can draw the attention of HMRC to the situation, whereas a more realistic valuation it wouldn't normally be questioned.
Exactly. And particularly if you're around the inheritance tax threshold,
Yes.
if your estate's on maybe the £322,000 mark and you've only got an inheritance tax allowance of £325,000, HMRC are going to be looking particularly closely at where's that £3,000 gap come from.
Okay, great. And then, so we're very happy. We've got this valuation of 350,000, an official valuation of the property, or perhaps someone had offered to buy it at that price, but then it didn't proceed, and then we then move into the next scenario where we've got a buyer at 400,000.
And that's where it's really important that we've got the first valuation correct, because we might have the valuation correct for probate purposes. And to be clear, the valuation for probate purposes, I mean the value that the property is worth on the day that somebody passes away.
Okay.
Because it can take a while to get together all of the details for probate. So what a property was worth in December might be very different to what the property can be worth like in the summer when you've got all those details together. And if that was correct at the time, that's great. But we've actually then sold the property and made a significant gain on it. Yeah. And I emphasise the use of the word gain because to us solicitors, that triggers us to think about capital gains tax.
Yeah.
So we have to be thinking about what is the best valuation to use for probate, even when there's no inheritance tax payable, because we want to consider what future taxes might be coming up.
Yeah. So one thing that we always say is a well-known phrase, there's only two things certain in life, death and taxes. And so when you're dealing with probate matters, we've got inheritance tax is the big one that everyone knows about. But of course, capital gains tax feature a lot in the work we do, as does income tax, of course.
Absolutely.
So you've got this gain of £50,000 and your clients weren't aware that this could potentially be an issue.
They're quite shocked when I talk to them about capital gains tax. They think it's something that just happens in their lifetime, or it's something that only applies to people who have businesses or multiple properties, and they don't realise it can be a very real scenario for their parents' house, which they thought was a lovely little, cottage in Leigh-on-Sea, but actually turned out to be worth a lot more money than they had realised.
Yes. So what advice, what can be done about this gain? Does I know that there are two options, aren't there? Basically, you go back and say, was that probate valuation correct, actually, or should the probate valuation have been higher? Obviously, that could mean more inheritance tax at a rate of 40%. Or are we saying there's been an increase since the date of death, and then that would be a gain?
It would. And the second scenario is far more likely, because I think what executors are tempted to do is when they're going to sell a property, they think, I'll invest all this money in it, I'll do it up, I'll make it look beautiful, without realising that all that investment they're putting in, yes, it's making the property worth more, but is it making it worth too much more that you're now being in the realms of capital gains tax? Now, capital gains tax on residential property is at a rate of 28%. So it's still lower than the inheritance tax rate. But it's really important when we're doing the probate application to have this discussion 6 months in advance with the executors, so that when they're deciding what value to use in the first place, they are aware that if they make a gain on that value, there will be taxes to pay in the future. Because you can be strategic then with what you pick as your proper valuation.
And what you spend, and documenting what you spend, so that can come off the gain in the same way as any other capital gains tax scenario, that legitimate expenses offset.
Absolutely. And there's options of how you can work with capital gains tax, and we can look at several different things. If all of your estate is passing to a charity, then charities do not pay capital gains tax, so it doesn't matter if the property's gone up in value, because that tax is then not going to be passed on to the residuary beneficiaries. If you've got maybe a capital gain of, say, £25,000, but you've got two residuary beneficiaries with a full capital gains tax allowance of their own, we can potentially appropriate the property to them. So by that I mean we can take the property out of the estate and give it 50% to one beneficiary, 50% to the other, and use their own personal capital gains tax allowances. And if each person uses theirs and we've made a capital gain of £25,000, we're potentially going to have a very, very minute, if any, capital gains tax bill.
But it's a huge savings.
Huge saving,
But of
thousands
course,
of pounds.
as with anything, it's essential that it's properly documented, illustrated, and the can be backed up for when
Completely.
the figures are returned.
Completely. You can't just decide today I've appropriated the property like that. It doesn't work. It needs to be done properly and by way of a deed of appropriation. And that's where us solicitors come in to make sure that firstly it's done right the first time round, and then secondly nothing comes back in the future that you were not expecting.
And when you say come back in the future, of course that's particularly pertinent to executors, who are the ones that carry that liability, aren't they?
The blame's on them if it goes wrong.
Exactly, and the Inland Revenue come looking for them.
They do.
And although obviously they've got the right to go after the beneficiaries and say, please pay this tax bill that none of us thought about, but they might have spent all that money, and then it sits with you. So it brings me on to just how important it is the executors that you appoint in a will and accepting that role to be an executor.
It's a huge responsibility, and I think it's perhaps underestimated how much responsibility people are placing on their executors, because it's quite often that clients come in and say, oh, I'd like my children to be the executors, and it's a bit of an off-the-cuff remark and they don't think any more of it. But actually, we're really careful when we're drafting that will and appointing those executors to check, actually, do your children get on with each other? Do they both live in this country? Is one living abroad? Does one have a lot of work commitments? Are they going to have the time to spend on this? And quite a lot of the time, my clients look at me with a sort of stunned look and think, oh, actually, no, they don't get on, and no, they're going to argue about that. And that's where we can have a proper discussion at the will writing process and that stage of the process.
As to who should be the executors.
Who should be the executors.
And then similarly, sometimes people think, well, I better have my two children because I don't want to pick one. But then, as you say, you have the conversation and it comes out the one is a far more dominant character than the other.
Yes.
Or that, as you say, they don't get along. And then the other options then are to appoint other executors. You can appoint professionals, solicitors, etc., who will charge, of course, a fee. But you could also appoint somebody independent or be firm in thinking, well, actually, I do have 3 children, but one of them is far better placed. As long as I explain it and discuss it with them initially, it will be fine.
And you can do a letter to accompany your will to explain why you've decided for that one child to be the executor, or you can have a middle ground between them and you can pick one child to be an executor alongside a professional executor. And that I find works particularly well because then you've got the professional who can give the legal expertise and their knowledge and experience, and that adds value to what the child executor, your own executor, is having to do with the estate.
Yeah, and I think as well, I found when I'm an executor, I'm always offering myself up as the buffer, as in, if there's difficult decision to be made between the siblings, different rights, arguments over chattels, it's surprising. I use that very old-fashioned word. I should not have used that. I should say people's things, your photo collection, your pictures on the walls, your great-grandmother's wedding ring. These sometimes are the little things that cause disharmony.
They are.
And then they've got the professional executor or the independent executor saying, right, hold on, we need to draw a line and we need to think about this. Or going back to the property aspect, when there is a disagreement over what price to sell the property at.
And that can be one of the most common disputes. So the 2 common disputes I see are what to sell the property at and who to market it with, and there's often disagreements over funerals and arrangements to do with that. And that's where having an independent person who can come in with no bias, no agenda behind it, and just say practically, here's the best way forward, can be a really valuable asset.
Yeah, and going back to a probate property, in recent years I've noticed a beneficiary saying, well, we might want to let out the property, actually, have it transferred into our names, or even let it out for the first couple of years and keep it in the probate estate. That's fraught with complexities, isn't it?
I hope you saw my face, the look that I gave you when that's suggested, because it is incredibly complicated. Firstly, I think it's underestimated how much work is required when you're going to be the landlord for somebody.
Yeah.
Secondly, we have to think about other taxes in the estate. So to date, we've mentioned inheritance tax and we've mentioned capital gains tax. But there's another one we haven't talked about yet, which is income tax. Yeah. So if you are keeping the property within the estate and you are then going to be renting that property out, you're going to be getting income. And that's where the income tax comes into the estate. Now, income tax in itself, we all know quite a lot about. We've all had to pay some sort of income tax in our lifetime, but it can also trigger other things to be done now within the estate. So we're going to have to think about the estate being registered as a trust to hold the income. So that then requires us to notify HMRC through their trust registration scheme that there is a trust in place. And now suddenly you're not just renting out a property to, you know, lovely old Mr. Smith who lived down the road and wanted to move in, but you are now the trustees of a trust and you've got income tax.
Exactly. Really tricky, isn't it?
Really tricky.
But sometimes there might be one beneficiary who says, well, actually, I'll keep the property, I'll buy you out, and then I'll let it. That's a whole different scenario.
That's different because that's then going into their personal names and they're therefore personally responsible for it. The issue comes when you keep the property in the estate and the executors have that ongoing responsibility for getting this all set up properly.
But in terms of one beneficiary buying out another, you still have to be very careful of the valuation that's used, any stamp duty that's payable.
Particularly if that beneficiary is also an executor. So we have certain rules we have to comply with. And one of those rules is the self-dealing rule. Yeah. So there is a rule in law which means you cannot sell something to yourself as an executor because you'd have a conflict of interest. Yeah. So I'll give you an example of this. I've seen a client recently who came in and they have got a brother. Their brother's got plenty of money. They didn't really want the house. They would love to carry on living in their mum's house. And they're one of the executors of the estate. So they made an agreement with their brother that said, it's okay, I'll give you £200,000 and I'll keep mum's house. And everyone's in agreement. So you'd think they'd come to me and we'd have a round table discussion and it would be fine and easy. But there's a problem there. As the executor of the estate, they have got a duty to collect into the estate as much money as possible. But because they're buying the property from the estate, for them personally, they want to get a good deal on it. They want to buy it for as lower amount as possible. So on the one hand, their executor's duty are conflicting with their own personal ideas of what they want.
Which goes back to the idea of an independent executor so that you don't have one person who's basically got two hats on, one as a beneficiary and one as an executor.
Exactly.
And I think it's fantastic that on the government website now, there's lots of encouragement about executors and lots of advice to them about how to get grants of probate. But we're really obtaining a grant of probate as an executor, in our view, is only for the most simplest of estates. But equally, I know we have an increasing number of executors who have obtained that grant of probate themselves and then come to us for advice after that time. And we can, in those cases, pick up pieces and start to finalise things.
Sometimes that's harder though, because then we're having to unpick what's already been done and redo it. Whereas if they'd just come to see us a couple of weeks earlier, a couple of months earlier, we could have got it right the first time round. And by that point, the property could already be on the market. They could already have a buyer. So it can be easier just to get it done right once.
So sticking with the subject of property and probate wills and trusts, we have an increasing number of people coming to make their wills. Saying, well, we know we've got to make one, but we don't know how to do it because we're in a second marriage, maybe. We bought a property, put all our money in. So what happens?
And in this scenario, they're a married couple.
Yes.
It can be really tricky when you're dealing with merged families and things like that, because you've got to think about a lot of different dynamics and how that works. So every family is different. There will be different relationships, particularly when there's children and stepchildren involved. And it's a question of, you might want to be fair to everybody, but what is fair? What does that actually mean? Because it'll be very different. Does fair mean leaving everything to your own biological children? Does fair mean including your partner's children? It's
and
a really
also
tricky.
What's going to work on a practical basis. And of course, if they've come to us and they've already bought this property, we have to go back and look at the property and the way it was purchased. Who gave what money to the purchase? Who is paying the mortgage? Has somebody paid for an extension, in fact? And there's this lovely word, declaration of trust, because trusts sound really complicated, and actually they often are, aren't they, and have to be registered with the taxman, etc. But properties owned by more than one person are a trust, aren't they?
They are. And I think it's something we quite often overlook because it's so common to buy a property with your partner, with your spouse and things like that. But when you are purchasing that property with them, there will have been an option to decide how you're going to own that property. So there's two ways you can own a property. You can either own it as joint tenants, which means
tenants. Now, I think you're going to need to explain why you've used that. That sounds like a lodger.
So tenants does sound like a lodger. It doesn't mean you've got a lodger there. Tenant is just an old-fashioned word for owner of the property. So perhaps I should call it joint owners.
Yeah.
And that means that when one of the owners dies, it will pass automatically to the survivor.
Which, of course, is great in many relationships. But it's not if you didn't intend that.
And that's where the problem is.
So if you are people in a second marriage, for example, there's many other scenarios when it wouldn't work, but if you are people in a second marriage and you thought, well, I want my half to go to my children and she wants her half to go to her children, and you've got that type of ownership, that wouldn't happen, would it?
Even if your will specified really clearly, I want my part of the property to go to my children, if you own the property as joint owners and you haven't got this sorted out properly, your will is not going to be coming into effect in the way that you think it is going to. And that's quite shocking and upsetting to people.
Yeah.
And it's particularly upsetting to the children who are then potentially missing out on the asset that they thought was being passed to them.
So the trick is they say that you look up the property title. It can be changed, can't it? And one of these wonderful declarations of trusts drafted that provides for their specific circumstances. I gave this percentage, you gave this percentage. Let's divide the property into these relevant shares. Let's live very happily in the whole house together in the comfort that when one of us dies, by our will, we will do what we want to do with it. And that can mean letting your partner, spouse, live there forever, move house if they want to. But it's all about the declaration of trust and the will.
It is. Declarations of trust are kind of magic documents. They're absolutely brilliant because they are completely bespoke. And by that, I mean they are designed to your specific circumstances. There will be no two that are exactly the same. And you can use them however you want to.
Yeah.
If you want to protect some money you've inherited from a grandparent, if you want to protect your savings that you've invested in a property, however you want to do it, you can make sure that if you are the one putting that money into it, you can get it back out again at the end of the day.
Really important and really money well spent to get that advice, as important as your buildings insurance or your mortgage protection policy or the survey that you've had.
Yeah.
So, really important. It's a one-off cost on the whole, isn't it, to get the correct advice. And we've run out of time, Demi. I feel like I've said that quite a lot over these weeks, but thanks so much. And property, as it is attached to wills and probate and trusts, you've nailed it. Thanks.
Thank you very much for having me. Thank you.